Welcome back to Dukascopy TV. I'm Darren McDermott. I have Bernard Sin in the studio from MKS to have a look at gold. Welcome today.
Welcome. Thank you very much for having me here.
So looking at gold, looking at the performance of gold and trading trends, now gold was near 5-week highs this week on the view that Fed would keep stimulus. Now yesterday we actually saw it fall against the US dollar. So why was this?
Well, this all happens, Fed that's still trying to make stimulations to the market, which keeping the rates low as possible and creating jobs. Few Americans employer creating fewer jobs. In other words, this is a big concern where the whole economy is unsustainable. What is going to happen is that by injecting liquidity into the system, so by supporting the stock market, it will naturally create jobs. However, when you look at Fed, keep insisting or keep injecting liquidity, clearly you have a situation, you have an effect. Now, gold, what is gold role? Gold basically play a very significant role in this whole financial market. The way it is, you see there is an imbalance of supply and demand. And if you look at the annual production, it's only 2,500 tons, but the actual demand is nearly 4,000 to 5,000 tons. How does it show? If you look into look at the statistics for the year, for the past few years, China has been importing gold at nearly a ton a year. And you talk about India, which has been importing gold as well, a ton. And the rest of the market, the central bank has stopped selling it as the net buyer. Take away it took about 500 tons. So, and the other sectors are investment, the other country like Thailand, Turkey, it adds up, the whole of Asia, it adds up to nearly another ton of gold that is being consumed. So by looking at that for the last 3 years, that clearly we have a situation that where this demand is actually surpass, supply. So, and looking at that, if the Fed continue to inject liquidity, clearly, it's going to be a big concern. Now, the thing is, gold, first reaction to Fed is not related to investor exiting, but is due to the natural fact that the investors think it from Fed point of view that is positive, and it's positive for the market. And you see that strengthening of dollars. At the same time, you see that it's all dollar strengthening. That is very naturally that gold is back to where it started. We have seen speculative buying along the way up, and we have seen profit taking all the way down, which means that they're all week-long liquidations. So, what you see right now in the day-to-day intraday markets movement, it is very natural for gold to react, but it's not that reacting in a very negative way, but it's quite positive the way it's coming off, and it's going to go up. Why it's going to go up? But at the end of the day, then you know that the situation in US is not solved. The problems are still there. In fact, it will create a much bigger problem. And now, and who is going to pay for those? And by looking at gold again, you're talking about, hey, you're not buying gold as a hedge against the currencies or a hedge against inflation, but you're buying gold as a capital preservation. So these will be there, you will keep it, there is no risk, you can put it anywhere you want. And if you put the cash in the bank, then you're subject to risk, it may not be guaranteed. Here again, what we saw, the recent move of the gold has been quite brutal because that is a huge wave of selling and huge wave of buying at the same time. That is, the physical market is supporting the gold, definitely definitely. And by seeing that all this movement, yes, it is supporting it. And who are the people selling? The hedge fund, the ETF, and and people are trying to get out because at some point they feel that if they put the money in the equity market, there is a return, there's a yield, but gold, there's no yield. It's a negative yield in that per se. That is why you saw that coming.
And you mentioned India earlier. Looking at India a little bit more, imports have gone down and premiums have gone up. So tell us more.
Well, India has a special situation where you see India has been consuming gold for the last 100 years, or probably more. And India's interest is in the culture, is in the religious, is in auspicious, and it's in their blood. What we have seen that is happening recently is that India government have seen the statistics, trade balances has gone to deficits. The only way, and if the Indian rupee has weakened, and that has to be resolved, and that has to be fixed. And what the government did was to impose taxes on gold imports. Now, the thing is that nobody could buy gold, and because there's a restriction, it's very expensive at some point. And the government come with another scheme. Instead of putting taxes, now they put in another scheme that which is restrict basically imports, which is the 20-80% scheme, which means that every 100 kilos import, 20% has to be re-exported out, making it has a value-added local produced export. Now, what is happening is India. Very interesting that in order to solve the trade deficits, and by doing that, and to support the weakening of, to revitalize the Indian rupee, the only way is to stop putting curbs on gold imports. Now, when they start to put curbs on the import, then there is a shortage of supply, and locally, it's just impossible to get them because they're just limited of supply. Which, in other words, you have seen recently that gone up from $50 to $130 premium, which is, it just shows one thing: they need it and they want it, but they cannot have it. So this is India has been importing 1,000 kilos a year, and this completely stopped.
So looking ahead in the short, medium, long term, what are your forecasts for gold?
Well, if you look at the last 10 years, gold has gone up actually 400%, and the last 3 years you're seeing it coming off 30%, and this year to date, it's 20% down. So if you look in the long-term picture, you've gone 40% down, 30%, and we continue down 20%. Actually, gold is actually making a big correction. I think that the gold will continue to trend in this way, but I think in a positive note. I think gold is going to go back to 1,900 into next year, and possibly with a low of 1,100, and we trade in the average of 1,600.
Bernard, thank you very much for sharing your views and forecasts.
Thank you for me.
And thank you for watching Dukascopy TV today. Do stay tuned as we have plenty more coming up on the show. See you soon.